Jonathan Sherman here. Today we're going to go over a stock trade I did in a company called the Chicago Board of Trade. This was when they were still trading as an independent company before they were merged with the Chicago Mercantile Exchange. Chicago Board of Trade was founded, it's a futures and options exchange. It was founded in 1848, and initially they were focused on agricultural commodities, but now offer trading in a wide range of financial products as well. They have a built-in monopoly as a major exchange company, and their sales and earnings growth reflected the fact that they had this monopoly position. There are a handful of other exchanges that had gone IPO at the time, recent IPOs, Chicago Mercantile Exchange, the ICE exchange, and they were all doing well, and so there was some investor enthusiasm about these stocks. And the stock chart was looking really good, and earnings and sales were also doing quite well. And so it looked like a good time to get involved in the stock from a timing standpoint, from the stock chart and from all the positive hype around the business. So let's see how the actual trade unfolded. In front of us is the Form 4797 from my tax return, and it shows a nice summary of the trades I did. And if we go down to the symbol BOT is the symbol for the Chicago Board of Trade. And you can see that I bought 400 shares over here on the 4th and bought an additional 1,100 shares on the 4th. Ended up with a good sized profit on the trade. If you add up the profit from up here, the 325 over here, and the 9, the 22, and the 3 over here, ended up with about a $33,000 profit on the stock, which was a 25% overall profit on the trade. Let's go into the trade confirms and see how it all unfolded. So I started buying. I bought it all at once on the 4th. I don't think I averaged in much at all. I bought 700 shares at 126.47, another 100 shares at 126.6, and another 700 shares at 126.2. And at that point, I was in the stock. Now, I didn't hold the stock for too terribly long. I believe I was in it for maybe 10 to 12 days overall. It moved up quite rapidly and was extended on the chart, meaning the price was hyperextended from the 200-day moving average, from the 50-day moving average, and it looked like a blow-off run, which means that you should be taking profits pretty quick. And so in 10 to 12 days, I was out of the stock with a 25% return. 8 days later, I started selling shares. I sold 400 shares at pretty much break even on this. There was a hiccup in the stock and it spooked me out, and I sold 400 shares to take some of the risk off the table. But it turned out it was just a hiccup, and the stock quickly recovered. And then on the 17th, I ended up selling the remainder of the shares. Chicago Board of Trade sold 1,100 shares for 158.1, and that's where I made the profit, was on that second sale a few days later. So I sold it in two little bits, got spooked out of a little bit in the front end, and then took a nice profit on the back end on the majority of shares. So it was a good trade overall. It was a kind of trade that you can do too. It's based on finding a stock that is in market favor, that has earnings and sales growth, and the stock chart itself is shaping up to look like it's ready for a run. There's institutional investors on board. So I wanted to go on to the next video where we're going to talk about a stock, a telecommunications company, an overseas telecommunications company, where I made a 22% return, and I'll show you how I found that company and how that all unfolded. I'll see you in the next video.